Welcome to the weekly trading signals. First, I'd like to start the session by giving you some information about me. My name is Ehab Jobail. I was born and raised in Egypt. I have passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own trading robot signals and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. Here are the events that we will be looking at this week. On Tuesday, 21st of April at 9:30 a.m. UK retail sales. At 12:45 p.m. ECB interest rate. At 1:30 p.m. the press conference. On Friday, 22nd at 1:30 p.m. Canada core CPI, and at the same time the retail sales from Canada. And there is also signal of chart of the gap that I found today of oil dollar. Now with the first event we will be looking at this week. UK retail sales that will be released on April 21st at 9:30 a.m. London time. UK retail sales should provide some volatility for the sterling as market remain indecisive over the upcoming referendum and recent US dollar strength. It's forecasted at minus 0.1%. Previous release was minus 0.4%. How to trade this news? The monthly retail sales report is a direct measurement of consumer activity at the retail level. A higher release is generally good for the economy and for the currency of that economy. A lower release is considered negative for the economy and not good for the currency for sure. Our tradable deviation or the surprise factor for the UK retail sales, and who is listening to deviation or surprise factor first time, it's the number or the difference between the actual release and forecasted release. We call it surprise factor or deviation factor. So our tradable deviation factor for UK retail sales is 0.5%. If our deviation is hit, we can expect the market to move more than 50 pips within first hour after the release. Of course, considering that we are expecting a minus 0.1% figure, I would recommend to make rise option on the pound at 0.4%. If we get 0.4% release as actual release or higher, and we make full option, my recommendation is to make full option at minus 0.6% or less. We should, at this time, after the release time, we should see if we are going to make rise option to see the weakest currency at the moment, to make rise option with the pound. and the strongest if we are going to make full option. If we get minus 0.6% release or less, we should find the weakest currency to make full option with the pound at this moment. So rise option on the pound at 0.4% or higher release, and full option at minus 0.6% or lower release. As usual, we will use the retracement trading method to trade this release. How to make it? We will wait for the deviation number, deviation factor. If we get it, then wait for the market to move with momentum first spike after the news release, and wait for decent retracement before entering the market and buying the option or placing your trade. Usually this retracement takes about 15 minutes, 20 minutes. So I don't recommend to enter the market immediately. The more you are patient with the market, the higher opportunities you get. Remember also to draw support and resistance levels before the news release. If the market breaks through these levels, this means you have a better opportunity at winning the trade. If we don't get the deviation number, expect the market to follow the pre-release market condition and sentiment, and also expect the market to move within the resistance and support range. So before every news release, you should prepare yourself. You should be ready by first get source to get the actual release from. Should be immediate. You can find immediate updates, automatic updates at my website, ihabjubil.com, and the press resource page. You will find automatic updates, and you can see the actual releases immediately. So first thing, source to get the actual releases from as soon as possible, definitely. Second is to define the trend of the market you are going to make your trade on. To see if the market moves in trend or not first. If it moves in trend, keep it in your mind. And you keep also the time frame. Like if it moves in 4-hour charts in trend, so keep in mind that you will trade based on this chart. So first source for the news to get the actual release on time. Second, to define the trend. Third, to draw the support and the resistance line at this chart. Again, if we choose, like as you can see here in this example, pound dollar 4-hour chart, you are going to trade on this chart. You will draw support and resistance lines. Resistance in green and support in blue line. And if you get the deviation factor, when you get the actual release, get the deviation factor, so you follow our plan. Rise option at, with this example, the pound at 0.4 or higher, full option at minus 0.6% or lower after retracement of the market, after decent retracement within 15 to 30 minutes maximum. But if we don't get our deviation factor, expect the market to follow the pre-release market trend. But if you don't have trend, like you can see in this chart, usually the market moves within this range. So if it's just touch the resistance level, keep in mind, if it doesn't make big move to break this line, most probably it will go down. So it will go with the trend of the market, but if it hit resistance or support, most probably it will change direction if the market doesn't make big move to break these lines. The news, we will consider trading this week as ECB interest rate that will be released on April 21st at 12:45 p.m. London time. ECB interest rate is done in two parts. First with the rate decision at 12:45 p.m., then followed with press conference at 1:30 p.m. Current market is expecting ECB to keep policy unchanged as recent rate cut and increase of asset purchases will require some time to work into the markets. But in the unlikely event of another easing, we should see sharp falling in the euro. Interest rate is forecasted at 0% as previous release. How to trade this news? As you know now, it comes in two parts. The first one is the rate announcement, followed by the press conference, where ECB Chief Draghi issues the official statement on this rate decision. Since it's unlikely to get a surprise from ECB in this release, there is no volatility expected following this release if we don't get any surprises. However, in the unlikely event that ECB surprises the market by cutting rates again, expect market to go into selling frenzy, and we should consider making full option immediately. Of course, if ECB decides to keep rates unchanged to as expected at 0%, then we should see relatively no change in the market volatility as this leg of move is expected. As usual, remember to draw the support and resistance levels before the news release. If the market breaks through these levels, this means you have a better opportunity at winning the trade. If we don't get any change in the interest rate or the press conference, expect the market to follow the pre-release market condition and sentiment, and expect the market to move within the resistance and support range. The core CPI will be released on April 22nd at 1:30 p.m. It's likely a high impact release to Canada, but since it's released together with the retail sales, I'd recommend paying attention to both releases and only trade if there is no conflict. It's forecasted at 0.4%, previous release was 0.5%. Our deviation for this release is around 0.3%, therefore look for tradable figure of 0.1% or worse to make full option on the Canadian dollar, or a 0.7% or better to make rise option on the Canadian dollar. As usual, we will be looking for an after news retracement trade for this release. And always remember to draw the support and resistance levels before the news release. If we don't get the deviation number, expect the market to follow the pre-release trend and expect the market to move within the resistance and support level. signal with us here today is oil dollar. I found interesting measuring gap with opening of the market today as Doha oil talks conclude without an agreement. So we saw gap with opening of the market. I expect oil to keep going down to the level of $39 per barrel. The measuring gap usually comes in the middle of the new trend, fresh trend, and as much as it moved before the gap, as much it will move after the gap. So I expect the market to move to the level of 39. I'd like to thank you for attending today's webinar. We will hold the webinar next Monday. Goodbye and see you next time.